Nearly 7% down this month at the time of this recording, but still up more than 50% this year. Let's talk about investing in Bitcoin in 2025. If you don't know me and it's your first time watching my content and you're wondering why should I listen to this guy when it comes to investing, hi, my name is Alan. I'm a self-proclaimed venture capitalist or angel investor. For more than 10 years now, I've been learning everything that I can about personal finance and investing, and that has enabled me to invest in over 30 private companies with million-dollar valuations in just the past 4 years. And today I want to share with you some of my views on Bitcoin, which a lot of people claim is an amazing investment, but is it really? If you've invested 5 to 10 years ago or even last year, then yes, it was an amazing investment, but going forward, it might not be the same situation. So let's explore how that fits in 2025 and beyond. A quick side note before we get any further, I own Bitcoin and also some stakes in crypto mining companies. I'm not against investing in Bitcoin, but this video is not meant to be financial advice, so whether you should buy or sell, you should decide for yourself and do your own due diligence. I'm not going to tell you that. What I do want is to highlight a potential blind spot for people that are looking to invest into assets that can produce them value over time. And I will also cover some potential workarounds. First of all, to get this out of the way, it's clear at this point that Bitcoin is here to stay. The trust is already there and an entire ecosystem has been built around it, like miners, exchanges, derivatives, and funds with the only goal of investing in Bitcoin. Even some governments hold Bitcoin, most of them from seized assets from criminals, but they still hold them. Bitcoin is considered by many an alternative to physical gold, a 2.0 version that's digital and decentralized and can be used as a store of value, and that's exactly the problem that I want to talk about. Up until now, its price has been growing a lot because of mass adoption. It became popular very quickly.
Bitcoin.
And the demand was huge. Because of the technology behind it, the production of Bitcoin is limited and its supply will eventually be capped, which means that no government can bring down its price by printing more money. There's another side note here which makes this point not completely true, but we'll get to that soon. But getting back to the main point, because its supply is limited, that means that the price of Bitcoin is set by offer and demand, or by how much people are willing to pay for it, which has been growing. But now that it has become more mainstream, we can determine that its demand fuel growth will only decrease over time. And we can already see that its price this year has been increasing more in line with other store of value assets rather than high growth ones. Another quick side note, there are some people that are saying that there will be a rally at the end of this year, but I believe we're going to see fewer of those going forward. We can also see that more investors tend to go to Bitcoin when inflation is high and also when there's fear in the market, similar to gold. So based on multiple factors, it's pretty clear that Bitcoin has been established as the digital gold of 2025 and beyond, at least until we get a better option. More on that later. We can see the problem from calling Bitcoin what it is, a store of value, meaning that it's an investment that doesn't create any value. When I invest in something and I want to make sure that my money grows over time, I look for opportunities that create value, not just exchange it. As an example, if I buy a rental property, it will start creating value for me in the form of rent, so my money starts working for me. Similar when you invest in a company that distributes dividends. Besides that share that you own, you also get the distributions. That also happens even without dividends, because companies will reinvest the profits towards creating even more value. In the end, you still own the same number of shares, but those are slices out of a much bigger pie. Some companies will also opt for buying back shares, which still creates value for you because you will own a bigger percentage of the company. So in those investments and many others, value is produced. Or lost if you don't invest in the correct things, but that's a separate topic. In any case, it's something that's called a non-zero sum game. Meanwhile, if you buy 1 Bitcoin now, in 10 years you will still have 1 Bitcoin. Its price might be bigger, but it's still 1 Bitcoin and there are no underlying assets that are growing. And if we are to assume that its price will act the same as it does for gold, over time its growth will be outrun by value producing assets. Even miners that rely on this asset don't hold on to it. Instead, they sell it and use the profits to reinvest into physical assets, GPUs, real estate, or even hiring more people. The reason why they do that is to create more value, not just store it. Not creating value also means that its price is not linked to how good its production is. That means that Bitcoin can be a good mechanism for protecting yourself against downside, or hedging. Like in the previous case, if you own 1 Bitcoin and the entire economy falls, you still have 1 Bitcoin. Not sure if the latest drop in the market really supports this hedging case, but let's just assume that it does. Especially with a lot of discussions around the potential AI bubble, the political uncertainty, the devalorization of the dollar, Bitcoin is still considered a viable, non-sovereign solution to storing value. So if you believe those narratives, check if Bitcoin is a good solution for you by doing your own due diligence. But besides those scenarios, know that hedging is usually a sacrifice. Hedging implies that a percentage of your portfolio won't perform just as great as the other value-producing assets. And that's the problem that I see. A lot of people still consider that Bitcoin is a strong investment because of past performance, without considering that over time as a store of value or digital gold, it might underperform compared to value-creating assets. I personally use Bitcoin as a hedge against a potential downside compared to gold, which I believe is a relic of the past. But I don't just let it sit there. If you still decide to invest in Bitcoin, one strategy that I use and you could also look into is to transform it into a value producing asset through other means. There are some platforms that will allow you to lend your Bitcoin or stake it, but it's not really staking, in exchange for a small return. Again, do your own research to decide if this is a good choice for you, but in my case, this is how I've been able to create some value from my Bitcoin holdings. Another more recent alternative is to use your Bitcoin as collateral for taking on a loan so you can buy value producing assets. I personally wouldn't use this method because there's a high chance that the price of Bitcoin will drop and there's the risk that you can get margin called on your loan. But maybe you can use this as a reference for finding other ways how you can create value from your Bitcoin holdings. High growth and potential comes with a huge cost, overpricing. You need to consider that at one point or another, maybe next month, maybe in a couple of years, maybe 2 decades from now, the hype around Bitcoin will die off. That might not mean that it will go to zero, but it could lead to its price falling significantly if it was overpriced. When that will happen, or even if it will, is the $1 million question. Now, in the grim scenario that Bitcoin goes to zero, there's a huge problem. Compared to owning shares in a company that are backed by its assets that can be sold in case something happens, Bitcoin has no real assets behind it that can be liquidated. The price is set by demand, but what happens if there's no more demand? Who will be left holding the bag? Another quick side note here before anyone mentions this, because I know that will be the case. Yes, also fiat currencies are no longer backed by real assets. And that's exactly why it's a good idea to look into value producing assets, because in the end those will always be worth something. You can say that Bitcoin is too big to fail, but that's been debunked for other things, and innovation doesn't wait around. I believe that demand will continue as long as people still see value in this asset, but I have two concerns here. Holding true to its founding values, independence, decentralization, and some others, and also being reliable. Decentralization works as long as no single party owns more than 51% of the network. It's hard to know who is behind all of the miners in the world and also how concentrated control is. There's also the possibility to go even lower if they want, because GPUs, the mining equipment, can be easily restricted by governments. On top of that, a significant percentage of people keep their Bitcoin holdings on exchanges which are not decentralized and subject to regulations. That, for me and many other problems, make it so this doesn't really look like a completely independent asset. Besides who controls the network, we also need to consider who can influence the price of Bitcoin. If you look at the charts, the price of Bitcoin is heavily influenced by what's happening in the world, specifically one country, the US. This was specifically obvious that it became a problem in the most recent drop when someone shorted Bitcoin right before a major US announcement that made it crash. Or in short, insider trading. Besides this, there are a ton of whales that hold a lot of Bitcoin that we know nothing about, and we don't even know what their intentions are. That again, at least for me, doesn't sound like a really independent asset. Still, Bitcoin is more independent than most other asset classes, but easy to influence. At least it's still reliable, right? As long as there's no concern with its safety and there are no better solutions, I believe that Bitcoin will still have demand. But what about afterwards? Unless we're talking about day trading, which is either speculation or insider trading, a smart investor should look 5 to 10 years ahead or even more and try to determine how things will look then. If we are to apply that principle, we need to consider that there are already discussions on how quantum technology will be able to break the security of Bitcoin. Even if it won't apply to all of the wallets and all of the encryption behind it, we still don't know how it can influence its price and its trust. And we're not talking here about 20 years or even more. There are people that are considering that this could happen within the next 5 years. Maybe that's a bit positive, but even if we were to take the average of 10 years, that really becomes a concern. There are already people that are working towards finding a solution and improving the security, but there will be a limit until we can push non-quantum technology, until we will need a better alternative. And there won't be a seamless transition because whoever will create the next Bitcoin won't be just willing to just give it out for free to existing holders. Unless there's like a global effort to do this, but let's be honest, that won't happen. So whether you believe in the obsolete narrative, in the independence problem, or neither of them, just make sure that you're not the last one holding the bag. So just to summarize this, Bitcoin is probably here to stay for the foreseeable future until a major thing happens, but I believe that every investor should know very well what they are investing into and decide for themselves whether Bitcoin's lack of value production fits into their thesis or not. Thank you for watching until the end. Let me know in the comments what do you think about Bitcoin, whether it's an investment for you or not. And if you want to learn more about investing, you should see on screen some other videos from me that you could go ahead and watch.